Assalamualaikum and hi everyone. We are from BA2621B and today we'll be presenting about financial ratio analysis of FNN and the SHALIME. But before we started, this is our team member that consists of 5 people. The objective of this report is to compare the financial performance of Fraser and Nick Holding Berhad and the SHALIME Industry Berhad from 2031 to 2035 using financial ratio analysis and provide recommendation based on the findings.
Next, I would like to introduce Fraser and Nick Holding Berhad, or which is known as the FNHB. So FNHB was established in 1883 by Charles Fraser and David Chalmers. With over 140 years of experience, the company has grown to become one of the oldest and most established food and beverage companies in the ASEAN region. Today, FNHB is a Sharia-compliant company listed on the main market of Malaysia, generating more than 5 billion ringgit in annual revenue. The company operates through 3 main business segments, namely a food and beverage Malaysia, food and beverage Thailand, and property and others, with the operation across the Malaysian, Brunei, Thailand, and Indochina region. FNN is well known for popular products such as 100 Plus and Teapot, with a wide range of food and beverage products. The company expands its business through the acquisition of Sri Noda Industry in 2020 and Coconut Holding in 2022. Currently, FN employs around 2,500 people and exports its product to more than 90 countries worldwide. With a strong brand reputation, extensive distribution network, and commitment to quality and sustainability, FNN continues to strengthen its position as one of the leading food and beverage companies in Asia. Next, I would like to introduce the Syazwani Industry Berhad, or which is known as a DLMI. The Syazwani was established in 1963 and is one of the leading dairy companies in Malaysia. The company is dedicated to producing halal and nutritious dairy products for consumers of all ages, guided by its purpose, nourishing our planet and people in every stage of life. Its product range including liquid milk, such as the Syazwani Pure Farm, infant formula like Freezable, as well as adult nutrition milk, yogurt, and family dairy products, ensuring that the nutrition needs of different age groups are met. To maintain high product quality and safety, the Syazwani operates a modern industry 5.0 manufacturing plant in Estate Mercury Milan. The company also maintains a nationwide distribution network, enabling its product to reach a consumer across Malaysia efficiently. In addition to its business operation, the Syazwani actively contributes to the community through the school milk program, which has been running since 2011 and supports CNET's nutrition research to improve children's nutritional well-being. Overall, the Syazwani remains committed to the quality, product safety, reasonable marketing, and community nutrition development, reflecting its dedication to improving the health and well-being of Malaysians.
The current ratio measures a company's ability to pay its short-term liabilities using its current asset. For FNN, the ratio remained above 2 times throughout the 5 years, although it is declined from 2.95 times in 2023 to 2.01 times in 2025. It still shows that FNN has a strong liquidity position. For the SHALIME, the current ratio was much lower, ranging from 0.80 to 1.58 times. A ratio below 1 means the company may face challenges in paying its short-term obligations. Overall, FNN has much stronger current ratio than the SHALIME. Unlike the current ratio, the quick ratio excludes inventory and measures how well a company can pay its current liabilities using only its most liquid assets. FNN maintained a quick ratio above 1 throughout 5 years, with the highest at 2.04 times in 2023. This indicates that FNN can comfortably pay its short-term debt without depending on inventory sales. On the other hand, the SHALIME's quick ratio stayed below 1 every year, ranging from 0.32 to 0.64 times. This suggests that the SHALIME depends more on selling inventory to meet its short-term obligations. Therefore, FNN has a better short-term financial strength. Net working capital is calculated by subtracting current liabilities from current assets. A positive value shows that a company has enough current assets to cover its short-term liabilities. FNN recorded positive net working capital every year, increasing about from 1.1 billion ringgit in 2021 to 1.66 billion ringgit in 2023, before slightly decreasing in 2025. This shows strong financial stability. In contrast, the SHALIME's net working capital became negative starting in 2023. A negative value means current liabilities are higher than current assets, which may indicate liquidity problems. Overall, FNN is in a much stronger financial position than Dutch lady. This ratio shows the average number of days a company takes to collect payments from its customers. A lower number of days is better because it means the cash is collected faster. FNN took between 48 to 70 days to collect payments, while Dutch lady only took around 24 to 31 days. This shows that Dutch lady collects cash from customers much faster than FNN, which helps improve its cash flows. This ratio shows how many times a company collects its receivables during the year. A higher ratio means faster collections. FNN's receivable turnover ranged from 5.16 to 7.57 times. Dutch lady recorded much higher turnover between 11.78 and 15.29 times. This means Dutch lady is more efficient in collecting payments from customers compared to FNN. This ratio measures how quickly inventory is sold and replaced. A higher ratio generally means better inventory management. Both companies recorded a similar inventory throughout the 5 years. FNN improved from 3.66 times in 2022 to 4.76 times in 2025. Dutch lady also maintained stable performance and reached 4.85 times in 2025. Overall, both companies managed their inventory efficiently, with Dutch lady performing slightly better in the final year. This ratio measures how efficiently a company uses its fixed asset to generate sales. Dutch lady started with a much higher ratio of 5.50 times in 2021, but it gradually declined to 2.38 times in 2025. FNN remained relatively stable around 3 times before dropping to 2.34 times in 2025. Although Dutch lady performed better in the earlier year, both companies recorded almost the same performance in 2025. This ratio measures how efficiently a company uses all of its assets to generate sales. A higher ratio indicates better assets utilizations. FNN assets turnover gradually declined from 1.14 times in 2021 to 0.93 in 2025. Dutch lady consistently recorded higher ratios ranging from 1.35 to 1.62 times. This indicates that Dutch lady used its total assets more efficiently than FNN in generating sales throughout the 5-year period. In conclusion, FNN shows stronger liquidity and financial stability, while Dutch lady performs better in managing assets and collecting receivables.
Based on the 5 profitability ratios from 2021 to 2025, we can conclude that both FNN and Dutch lady were able to generate profits, but their performance trends were very different. For FNN, all the ratios were relatively stable throughout the 5 years. Even though there was a slight drop in 2022, FNN managed to recover and maintain consistent gross profit margin, operating profit margin, and net profit margin. The ROE and ROA also stay within a stable range of around 12% to 60% and 9% to 11%. This shows that FNN has strong cost management and is consistent in generating returns from both equity and asset. For Dutch lady, the performance was much more volatile. In 2021, Dutch lady recorded very high margins and return, especially in ROE and ROA. However, in 2022, all the ratios dropped sharply. Although there was a gradual recovery from 2023 to 2025, the profitability levels are still far below the 2021 figure. In conclusion, FNN shows greater stability and consistency in profitability. Meanwhile, Dutch lady started very strong but faced major challenges in sustaining its profitability. Overall, FNN appears to be in more stable position when it comes to generating profit and returns for shareholders. Based on the debt ratio, debt equity ratio, and time interest earned from 2021 to 2025, we can see how both companies manage their debts and financial risk. For FNN, the debt ratio and debt equity ratio increased gradually from 2021 to 2024, but remained at a relatively low and manageable level. The times interest earned was very high in 2021, then dropped, but still stay above 18 times from 2023 to 2025. This shows that FNN used a conservative amount of debt and has no problem covering its interest payment. For Dutch Lady, the debt ratio and debt equity ratio were consistently higher than FNN. The debt equity ratio even exceed 100% in 2022 and 2023, meaning the company relied more on debt than equity during those years. However, it has started to improve in 2024 and 2025. The times interest earned also dropped sharply after 2021, but it remained above 15 times, which is still considered safe. In conclusion, FNN has a lower level of financial risk and a more stable capital structure. Meanwhile, Dutch Lady used more debt financing and carries higher financial risk, although its leverage position has improved recently. Overall, both companies are still able to meet their interest obligation comfortably.
Next is the evaluation of the company's performance. For the liquidity ratio, FNN performed better with stronger liquidity and higher working capital. It shows better short-term financial stability. For the efficiency ratio, Dutch Lady performed better by managing receivable and asset more efficiently, while both companies show comparable inventory turnover. Moving on to the leverage ratio, FNN demonstrates lower financial risk and a stronger ability to meet its debt obligation. Lastly, for the profitability ratio, FNN delivered more consistent profitability, although Dutch Lady recorded a higher return on equity. In conclusion, FNN performed better financially than Dutch Lady from 2021 to 2025 by demonstrating stronger liquidity, lower financial risk, and more consistent profitability. Meanwhile, Dutch Lady showed better operational efficiency through faster receivable collection and stronger asset utilization. Therefore, FNN can be considered financially stronger overall, while Dutch Lady excelled in operational efficiency. Thank you.